Don't forget to get your free money from Webull and from Moomoo, guys. Link down below. Just deposit at least $100 with Moomoo. You get up to 5 stocks, each up to $2,500, and that runs out at the end of May. And you could also get up to 6 stocks from Webull, which also runs out at the end of May. So use those links down below. And now let's get into the video. Alrighty, guys, let's break down the game plan for this week in the stock market. Let's go over what the markets have been up to, charts I'm looking at, and of course, we have to break down stocks, earnings this upcoming week, which we have 8 companies to break down in this video, all of which are reporting, and obviously 2 more to make it 10 stocks for the video. So sit back, relax, and let's get into it. So at this point, all of you should know that last week was a crazy green week in the stock market, right? We had SPY go from 386 to 416, covering almost 8% ground from just, what was this? The 24th of May to about the 27th of May. We had Triple Q go, let's see here, the low on this 5-day chart, 282 to 310, covering almost 10% ground. We had the Dow Jones, let's pull it up. Probably it didn't do as well as the other two, but still, it went from 31.3 to 33.2. It covered 6% ground. And we had the good old Russell. Got to give some love to the small caps, guys. Russell went from 1736 to 1887, covering about 8.5%. So last week as a whole, the NASDAQ crushed it, up 10%, and we had all the other indexes ranging between 6 to 8% in the green. So very strong bounce back week after being in a losing streak. You guys know this. The Dow was in an 8-week losing streak. The S&P, the NASDAQ, 7-week losing streak. So the fact that we had a bounce back week, quite frankly, guys, we needed that. The markets had that in store. We got it. Now the question is it going to continue? Is this rally going to continue? And let me be honest, we are at some very big resistance points all across the indexes here. We can see the Russell is getting very awfully close to that 180 SMA, which clearly has been resistance over the past couple of months on this 4-hour chart. We have the Dow Jones. Let's pull that up. The Dow Jones is also getting to that 180 SMA resistance, which is right around 33,600. And we have the S&P and Triple Q doing the same things, or approaching the same levels, rather. Actually, SPY broke out of it already. We actually covered that last week. I just forgot. I had to refresh my memory, and I just realized the markets are closed tomorrow, guys. I forgot about that until this second. Obviously, I remembered it, but during, as I'm filming this video, I forgot for a second. So it looks like I'm going to have to make another video tomorrow as well, because I am releasing this one when you're watching it, obviously, on Sunday night. So where was I? SPY did break the 180 SMA, which was right around 414. And this actually closed at about actually broke the 180. It was roughly at $412. We closed at 415 on Friday, and look at where SPY's at now. Well, not now in real time, but after the bell Friday, it actually ran up almost another $2. It closed just 20 cents under, or rather, after the bell, it peaked just 20 cents under 417. So nice push for SPY even after the bell. Triple Q, let's see here. Triple Q is right around the 180 SMA on the 4-hour. Yep, literally right at it. So for this week, even though Monday, the markets are closed, we got to see what Triple Q does at $310. If this breaks, I've said it before, I'll say it again, maybe we get a sustained rally, a continuation in this rally that gets us to 330. I mean, look, last time we had a big rally in the markets, guys, was back in the middle of March until the end of March, where Triple Q went from 315 to about 370. So in other words, it ran up percentage-wise. Let's take a look here. It ran up about 17%. Last time it had a big rally, it did break the 180 SMA. So if that happens again, we got a big we got a big pop above the 180 SMA. That could mean more green to come in the short term. And obviously, at some point, the rally is going to get exhausted. We're going to get selling pressure. But again, I believe 310 to 330, that window, we can catch that window, in my personal opinion. And we'll see how it ends up playing out. So what do you guys think? Let me know in the comments. What are your thoughts for the markets this upcoming week? And again, Monday, the markets are closed. So we do have a short week, but still, let me know your thoughts in the comments. I appreciate all of you watching. Hit that like button and make sure to subscribe if you haven't done so already. And with that being said, let's talk about some stocks, which 8 of these 10 are reporting earnings this week. Obviously, 2 are not, but we're still going to break those down, and those will be at the end of this video. So the first one is CRM, also known as Salesforce, guys. Ticker symbol again, CRM. Let's pull it up and see how this has been doing. So right off the bat, CRM's been downtrending under the moving averages. In fact, we just hit a fresh low at $154, which means officially it is down 50% from that $311 high, which was hit back in November, and I believe that is the all-time high. Let me double check though. Yeah, 311 is the all-time high. So CRM is now officially down 50%. Pretty crazy, right? And again, still under the moving averages. So they report on the 31st. They report on Tuesday, first day back from the long weekend. And their average EPS estimate is looking to be about 94 cents. Average revenue looking to be around $7.38 billion. And let me pull up on Yahoo Finance very quickly, guys. Here on my app very quickly. Let's see what CRM's multiple is right now. Trailing 12-month PE. It is right around 111. Yeah, that's pretty high. I have to dive deeper into that. And you guys know EPS numbers, they could be funky sometimes, which then throws off the PE ratio because it does use earnings. So I'll go look deeper into that after this video. But right now, even though it's come down a lot, it is still a roughly 110 trailing 12-month PE. To get a better metric, though, would be to look at the trailing the past 5 years P on average, for every year. That'd be a better metric to look at because the past year, that data could be, the EPS could be messed up, which then messes up the P ratio. We got to look a little bit deeper into it. But right now, CRM is set to report on the 31st of May, and we're going to be watching it, guys. I'm watching it very closely. I'm going to set my alert at $180. Mark is at or above, which is right by the 180 SMA. Funny enough, 180 is right by the 180 SMA, guys. So I'm going to set my alert there for good old CRM. And the next one here, which we haven't talked about in a while, but I'm still watching it, it is ChargePoint, guys. CHPT. ChargePoint on Friday alone. Look at this. It went up 14%. Massive day for ChargePoint. They're set to report same day as CRM on Tuesday, first day back, the 31st, and their average EPS estimate is negative 19 cents. Average revenue estimate is $75.72 million. So it's not that big of a company, but the beautiful thing is, guys, when companies are smaller, their revenues could grow way faster, right? You guys probably know that at this point. So let's say ChargePoint does $100 million in a year, for example. It could get to $1 billion in a couple of years, and that growth rate, obviously, we don't know what it's going to be, but it grows way faster when it's a smaller business, as opposed to, let's say, Apple that does however many billions per year in revenue. For that to double, triple, it's going to take a little bit longer than, let's say, ChargePoint to go from $100 million a year to $1 billion to then $5 billion if it ever does get there. If that makes any sense, guys. So ChargePoint, we're going to see if they do $75.72 million. That's the average revenue estimate, like I said. And this has been ripping like no other off of this $8.50 low. And I'm pissed at myself that I forgot to look at it during that really bloody point in the markets. Because it got from $13-14, that was just in the beginning of May, all the way to $8. In just a week, guys, this thing fell pretty much 40%. I mean, from $14 to $8. And I wasn't watching it during that week, I'll be honest. And now it pretty much filled that entire gap back up to about $14. So if you caught this at $8, $9, you got a pretty good deal, in my opinion. And if we do end up taking out, let's say, and guys, if you didn't get in, myself included, I'm kind of talking out loud here to myself, guys, but you're watching, obviously. If we break $14.50, there could be more juice left to squeeze out of this stock. I'm going to put my alert at $14.50. That's right by the 180 SMA and the high point from the beginning of this month of May. So if we take $14.50 out, this rally continues in the markets. People start going risk on in the short term. Not saying the bear market's over, but in the short term, if we continue this rally, ChargePoint has a shot at getting to a $16, $17 level, in my opinion. So I'm going to keep my alert at $14.50. We'll see what it does there. HPQ is the next stock for this video, which is HP Incorporated. Look at this chart, guys. It looks pretty good in my opinion. Let me clear this set and redraw this channel. Right now, what we're noticing is HPQ went up 5.4% on Friday alone. That's number one. Number two, this stock's been pretty range-bound all year, even before the year started. Back in November, we've been trading between $33 as support, and we've literally hit that and tested it and bounced off it multiple times over the past 6-7 months, and the resistance has been right around $40 a share. And look at where we are now, guys. We're at $38.75. We've been ripping up these past couple of days. Earnings coming up on the 31st, which is on Tuesday. If these numbers surprise and they're looking to do an average EPS roughly of $1.45 in the red, or actually no, that's the next stock. Excuse me, guys. $1.05 profit in the green for HPQ for EPS, and for revenue, $16.17 billion for the quarter. So if they surprise, guidance is strong. We'll see how that goes down, guys, and we ultimately break out of $40, $41, $42. There could be a huge breakout coming on HPQ, which again has been range bound for the better part of almost 8 months at this point. So I'm going to set my alert. Mark is at or above. I'll put it at $41. We'll see what it does around $41, $41.50, which was that high from the beginning of April. So HPQ looks pretty solid in my opinion. Now, Gamestop is the one that I read wrong here, guys. Their average EPS estimate is negative $1.45. So they're going to be red, and average revenue for Gamestop is looking to be about $1.32 billion. And they report on the 1st of June, which I did talk about GameStop in my last video, so I don't want to go too in-depth on this again. But overall, earnings are coming up this week. We're breaking out of 130. We're above the moving averages. Let's see if we slowly fill the gap towards $180, $200 a share. That's what I'm watching on GameStop. And another funny thing here, not funny, but another stock that I forgot about was Chewy, along with the one we talked about earlier, ChargePoint. Chewy is the the online pet store, if you want to call it that. Whatever your pet needs, food, this, that, they have a lot of stuff on Chewy, and this is a company that thrived during the 1-2 years that things were locked down. You guys know what I'm talking about, right? Chewy was going crazy. The stock was going crazy as well. Look at this. It went from $20 freaking dollars, guys, to $120, and now it's back to $20. Isn't that freaking insane? Isn't that crazy? It went from 20 to 120 back to 20. Here we are, guys. And this is a company that I used to say not all the time on the channel, but I mention here and there that I do eventually want to buy Chewy. Now, have I bought Chewy? I have not bought Chewy. Like I just said a minute ago, I forgot about the stock, quite frankly, because as the markets have been selling off, I'll just be honest, there have been stocks that have come down to levels that I would rather just buy those stocks than take the risk on Chewy, because Chewy is still a very risky stock in my opinion. Right now, the P ratio doesn't exist because they're not profitable. Earnings, EPS, trailing 12 months is negative 18 cents. So there you go. They're not profitable. The market cap is $11.4 billion. I want to get a quick reading here on what their financials are looking like, just in terms of revenue. Let me pull it up here very quickly. I'll cut this and I'll get right back to you guys. Wow, that's pretty crazy. So I'm looking here on Yahoo Finance, guys, and let me see if I can put this on actually for you guys to be able to see it. Maybe I'll just put a screenshot. How about that? Actually, no, there we go. So look at this. What we're seeing here is total revenue for Chewy. They did 8.8 in the trailing 12 months, $8.8 billion trailing 12 months total revenue. In 2021, they did $7.1 billion. 2020, they did $4.8 billion. And the crazy thing is their market cap right now is $11.4 billion. So their price to sales is almost 1. I mean, that's pretty crazy. Yeah, almost 1. Not quite there yet, but that's pretty good in my personal opinion. Yeah, no kidding, guys. Look at this. This shows you the price of sales trailing 12 months, and then over the past couple of years. If you're just looking at price to sales, Chewy has gotten extremely cheap over the past couple of months. I mean, Jesus, guys, 1.14 price of sales, and we have a company that's growing at a pretty nice rate. And now the thing is, will their revenue growth slow down? It might. It probably will. But at this point in time, we're not necessarily seeing that yet. And we obviously have to wait another couple of quarters to see how they're doing this year and so forth. But they're just pretty cheap based on price of sales. And looking at the past couple of years' price of sales, I like Chewy, so I'm going to have to do a little bit more in-depth research onto this one. what am I trying to say here? I'm well versed with their product because I personally use it. Their website, I order from there, yada, 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 for my dog, which is right here next to me, Ibiza, or she's sleeping, guys. But yeah, I know about Chewy, but now I got to dig a little bit deeper under the hood, look at the numbers, and, get some calculations going. But overall, it looks pretty good just from that price of sales metric. So let's dive into the next stock before I get too off track here with Chewy, guys. The next stock is C3AI, which admittedly, I don't know much about this company, but what I do know is it's come down a lot in terms of the stock price. It's gotten destroyed, and it's more speculative from what I do know about it. But look, it's come down a lot. Like I said, $54 down to 13. Now it's starting to break out above the moving averages. It's almost at $20 again, but still well within the downtrend still, which is not good, obviously. And they report earnings on the 1st, same day as Chewy, same day as Gamestop, which is on Wednesday, right? Now that I think about it, I forgot to tell you guys the average EPS estimate for Chewy and the revenue for Chewy. So let's do that very quickly right now. Chewy's average EPS estimate is negative 13 cents with average revenue estimate of $2.42 billion, which is up about 13 to 14% year over year, which honestly is not too bad. So now that I mentioned that, I forgot to mention that a second ago. Let's go back to C3AI. C3AI, they're expected to do, let's see here, negative 29 cents EPS, average revenue estimate 71.28 million, which is up 36.3% year over year if they do end up doing 71 million. So not too bad. And like I said with ChargePoint, guys, if these companies are doing only 10, 20 million in revenue, they can grow very rapidly. And that's how you honestly could make a lot of freaking money in the stock market, right? It's very risky. You gotta find the diamond in the rough, guys, but you could make a lot of money by buying a company like a C3AI, like a ChargePoint that's still small. I'm not saying these two stocks in particular, but companies that are small, growing, they have a nice moat, and you can see a path to profitability over time, and they're just growing ridiculous amount. These are stocks that you can buy when they're very small, and you can make a 5x, 10x, 20x. But again, you got to find the diamonds in the rough, and if you buy 10 stocks that are like that, who knows? Maybe none of them work out. Maybe only one or two of them work out. And if you do hit one out of the ballpark, the way to really make money doing that or having that strategy is to have one of your investments or two of them really blow up, and the other ones might not do anything. But obviously, the ones that blow up, you make a lot of money on them. Your overall return is still very strong, if that makes any sense, right? So C3AI, watch out for it. I'm going to set my alert at $25, and I'll probably just forget about it, quite honestly, guys, because I don't really have much interest to put money into this stock right now as an investment. Maybe as a trade, if it breaks out of 25, we shall see. The next one here is CrowdStrike, which went up 7% on Friday, up almost $11 a share. You guys can see here it broke out of the 50 SMA, and now it's trading about almost $40 off the lows from about a week or two ago at about $130, which is great. And they report on the 2nd of June, which is what? Thursday, and their average EPS estimate is 23 cents with average revenue of just about $463.2 million. So watch out for CrowdStrike. I'm going to set my alert right at the 180 SMA here at about $190. Mark is at or above. There we go. The next one, which I've watched and followed for a couple of months here, is Lululemon. Lululemon, when they reported their last report, I'm not sure if you guys remember, but the stock completely erupted or exploded, whatever you want to call it, right? It went up 15-20% in the days after, and then a week or two, 3 weeks after, it was up 30% from where it was before the report. So they crushed it, and then obviously as the markets got destroyed in April, Lululemon went from 413 all the way to 250. It lost about 40% value, and now it's slowly starting to turn around. Earnings are coming up on the second. Average EPS is looking to be about $1.43 with average revenue of $1.53 billion for the quarter. So let's see. Wednesday or Thursday, whatever the heck day it is, they're reporting after the bell. They broke out of the 50 SMA last week. They closed above it. This might start making a move. Don't be surprised towards 300, 350. And I'm interested, honestly, considering Lululemon's a higher-end clothing brand. I want to see how their sales are looking, EPS, their guidance. It's going to be important, guys. If they blow it out of the park, surprise everybody, this stock could be up massively. So keep that in mind. And the next two here are not reporting earnings, but the charts look pretty good in my opinion, and I figured, hey, let's break them down. So number one here, well, I guess it's not number one, it's stock number 9, guys. It is Dow Inc. Dow Inc. went up 3% on Friday, and look at this wedge. Look at this uptrend. I mean, this chart looks freaking amazing, right? It's above both moving averages. We have a wedge going on, and if this starts cracking above 69.50, $70, I mean, there could be a complete breakout on Dow Inc. It could take the highs out, highs being around 71.80 from back in the end of April. I'm really liking this chart setup, and let's see, what's the all-time high on this stock? I'm not even sure, to be honest. It looks like it's 71.85, 86. So if we take out that point, or $70, I think this is going all-time highs, maybe even beyond. So watch out for Dow. And the last one, last but not least, is Tesla, guys. Tesla went crazy on Friday, 7% green day, up $50 on the day. And if we continue this green, don't be surprised if Tesla, in fact, I'm very confident Tesla will be $800 by the end of next week. Let's say we have another just one big green day on Tuesday, $800 could be in reach on Tuesday, right? Maybe Wednesday. And look, the 180 SMA on the stock is right around 860 on the 4-hour chart. There's a wide open gap, wide open window where Tesla can continue running, because in the grand scheme of things, yes, RSI is overbought on the 4-hour, but the stock is so dang beaten down. Who cares about the RSI? It could still run. Just because the RSI is hot doesn't mean it has to collapse right then and there. It could get even hotter and hotter. And if we do end up getting to 825, 850, that is where we might start getting some sellers. So be careful there. But until then, I think the bulls are taking this higher. Let's see if I'm right or wrong. What do you guys think? Let me know in the comments. So with that being said, I guess that's it. Smash that like button. Make sure to subscribe if you haven't done so already. And join my Patreon if you want all my buy, sells, call outs, morning videos every day throughout the week, more access to me throughout the day. All of that's on Patreon, link down below, or you can simply go to stocksurfest.com/Patreon, check it out, join. If you don't like it, you can just cancel, simple as that. And also, don't forget to get your free money from Moomoo, 5 stocks, each up to $2,500, and you have a chance at a free share of Twitter, link down below, and you could also get 6 stocks from Webull. And with that being said, and mind you, those are also linked down below. And with that being said, cheers, guys. I don't have anything to drink right now, so I can't cheers you all, but I'll catch you in the next video. Have a great rest of your weekend. Peace out.